Hey, welcome in. You're listening to a special editorial for today, Wednesday, September 29th. I'm Al Corlin. Helping me out is my friend Bill Murphy from GATA, the Gold Antitrust Action Committee. You know, Bill, I got to tell you something. I'm concerned about this, and in a sense, I'm also very happy about it. I'm happy about the fact that the Wall Street Journal finally, on the front page of of today's edition, Wednesday, September 29th, had a front page article, as I said, entitled "Gold Vaults to New High." In the first paragraph, and I want to quote this, they say gold prices jumped above $1,300 an ounce for the first time on Tuesday in a seemingly unstoppable surge that has confounded skeptics and turned bears into bulls. You know, on the one hand, I'm really happy about that because everything that I've been talking about with folks like yourself on this radio program for the last 4 or 5 years has come to fruition. I mean, the whole time we've been in an upward gold market. Now that upward gold market has culminated into historically high price levels. Now, the only thing that concerns me is that when gold starts to be mainstream like this, that in the past has signaled the end of a bull market. Give me your comments on that first, would you, Murph?
Well, you know, if you go to the mainstream gold world and Wall Street, if you ask for their predictions here, almost none of them are bullish. Almost everybody's looking for a correction. And yes, there's getting some headlines here, but there's no excitement. So the share market's dead.
That's true.
Pardon?
That's true.
And if you look at real bullishness, it's just not there. The markets are actually very quiet at these high levels. This is not how you get blow-offs in market and short-term corrections, even though gold and silver have gone straight up for months, and they've gone straight up after the gold cartel took the price down ahead of this quantitative easing. It was, as I've said, and I said 2 months ago, this is the easiest trade, and I used to be a big commodity trader, I have ever seen in my life, and nobody was talking about it then. My friend Dennis Gartman said go short at 1160. Now he's out there saying parabolic top at 13. I think we're far more likely to get an explosion on the upside. The physical markets are in great shape before we get a correction, which is inevitable at some point.
Well, a correction is inevitable at some point, but you know, I don't think we're going to see the correction that we saw back in the very early part of the 1980s, where gold went from an all-time high of $800 or over $800 down to just a shade over 200. I don't think a correction like that is going to happen to you.
Well, I don't think it's remotely close. The physical markets are in such good shape. As a matter of fact, the big bullion banks and a lot of other people are short, especially in silver. They're trapped. They can't get out. If we're right, there's big players going after the physical market, and if that stays true to form as it has been since 1750, the sell-offs won't work because they'll just say want the silver. So, and it's very exciting. There's one other thing that people don't understand, and they think the market may be overbought. It's underbought, and the reason is the gold cartel, we used to have a $2 rule way back when, then a $6 rule, then a 2% rule, but this year they've been allowing almost all gains, especially of late, to 1% a day. That's it on the COMEX trading. So they are not allowing gold to trade freely and blow off. Consequently, you're not getting sticker shock in the physical market where the Indians and the big physical traders back off. As a matter of fact, today the premiums were ample, which has never happened before, and it's because the gold cartel is retarding the process in the upside to keep excitement to a minimum.
That's very interesting. I got to tell you, the studio dog who is barking her head off in the background seems to agree with you. Bill, you know, we had fun back in Toronto. There was some real enthusiasm back there on the part of the investors who attended that the investment conference that you were a featured speaker at, that I was fortunate enough to also be a part of. I think the enthusiasm that we saw back there is going to absolutely explode, and I think that explosion is going to take at least a year before it peters out. What's your opinion?
Well, I mean, one of my phrases is the American public still can't spell gold yet, and they are gold clueless. If you go around in America and ask people how many of their friends own gold or silver, you'd be lucky to get one in 100. We were talking about this at the conference. Somebody, I think it was Peter Grandich, made a great point. He said, you know, back in the 80s and in the 30s and 40s, there was 25 or 30% ownership of gold or silver or the shares.
I remember
right
that.
Now, today, it's 0.2%. Nobody's there yet. That's all to come.
I think you're 100% right. Hey, listen, if any of you folks out there listening to this haven't met this madman before, you're going to be at the Silver Summit, aren't you, Bill?
Oh, yeah. I'm going to have a lot of fun there. I'm seeing Mr. Jeff Christian, who was one of our big critics, who last year with gold under 1,000 said gold would average 941 for the next 10 years. And then there's John Nadler of Kitco, who said since 2007 gold's been is overbought, only put up by speculative hedge funds. And the guy's been wrong for 4 years in a row, and he never gives up.
Hey, we're going to have some time back in Spokane. I'm going to take the studio dog with us. We're all going to have a great vacation and a lot of laughs. Bill, let's make sure you and I don't gloat too much, okay?
Well, that won't be the case. We're just going to sit there and say who's been right for 10 years and leave it at that and let people look up at the record.
Bill Murphy, founder of GATA, the Gold Antitrust Action Committee. Thanks for taking some time, buddy. Big Al's going to be back tomorrow.